Thursday, December 9th, 2021, Monaco 64, home of alternative economics and contrarian views. So, yes, we are living in interesting times, I would say. All around us, we've got economic, societal, political, geopolitical mayhem, and I'm not surprised. I've been talking about the fact that we've been going down the route of hyperinflation or currency collapse. Yes, there are deflationary aspects to the economy, and by deflationary, I mean the economy slowing down, businesses going bankrupt. But one thing that's more clear than ever is that the central bankers and the politicians are going to continue to stimulate, and they're going to fight the collapse. But the symptoms are always very interesting, and hopefully a lot of you have been following me and been looking at it as well, been studying it through the books that I've been referring to you. So why am I going on about this today? Well, because I see it all around us. I'm in the UK, of course. So what is happening here? Well, we have the Prime Minister trying to cover up something they did last year that they shouldn't have done. They held a Christmas party when everyone was under lockdown, when we couldn't meet families were kept apart, and they had a party at 10 Downing Street, which is basically the equivalent of the White House in the US. So what he's done now, he's cracked down on the public. He's brought his plan B for more lockdown controls. Basically, this is what the Telegraph says: don't go to work, but do go to parties, says Boris Johnson. Immediate backlash at irrational new COVID rules after Prime Minister moves England to Plan B. The Daily Mail says top Tory tells Boris Johnson he must resign if he misled the Parliament over Number 10 party, as a backbench rebellion grows over PM's handling of the fiasco, and new Plan B rules that bring back work from home, more masks and COVID passports. So Boris on the ropes. I personally think he's going to be out very soon, this guy. And this is just here in the UK. Of course, you've got all the mayhem going on in Europe as well. Yes, they are accepting the draconian, even fascist rules and regulations in Europe, especially in Austria, Germany, and now in Italy. You have Australia, you have the United States, which is a slightly different case, but we see that the federal government, Washington, D.C., the Brandon administration is trying to crack down even more. I saw Fauci yesterday, and yeah, that's just the political, social aspect. I think keeping an eye on Twitter yesterday, after this guy, Boris Johnson, decided to go with his Plan B, I see a lot of anger. Also looking at the comment sections in papers like the Telegraph and especially the Daily Mail, which is the most widely read newspaper in the UK. People are not happy. A lot of people are saying, I'm not going to comply. So we've got that. We've got the economic, of course. The energy crisis in Europe is not letting up. I know the natural gas, US natural gas prices have subsided a little bit, but in Europe is getting worse. I'll show you here. And I have to thank Javier Blas, actually. I follow him on Twitter. He is from Bloomberg. He follows European energy, or the whole energy sector. And he was nice enough to send me a few charts that I don't have access to. But before we look at the charts, just look at what he said and this was from yesterday, December 8th. European energy crisis. So this is not me, this is him. German one-year power, 191 euros, record high. French one-year power, 222, also record. CO2 emissions, 90 euros, 75. Yes, I've spoken about that, how that's going to make it even worse for energy prices. And the natural gas price here for Europe, 105 euros. That's a 7-week high. So I asked him if he could send me a chart of the power prices for the UK, and he was kind enough to send it to me. It's called Power Exchange UK Day Ahead Power Auction Price. So as you can see, it's at 242. Yes, it's come back from a high above 400, but if you look at the last 10 years, this price has been trading basically around 50 all the time. There was a spike in 2016, but all along it's just like flatlining around 50. And since last year, since this crisis, and I would say this is an engineered crisis. You might not agree with me, and it doesn't really matter because I think it's going to end the same way with political, economic, currency, societal implosion, unfortunately, I have to say. If it doesn't happen right away, it will happen very soon. And being an observer of history, of economics, of societal mood, I would say, I haven't experienced this or seen it in Europe and the Western world for as long as I've been alive. Of course, this was happening all around us in the first half of the 20th century here in Europe. But as you can see, we're now basically 5 times more in terms of this power price in the UK, so it's not letting up. We've had a very cold last 2 weeks here in the UK, unusually cold, and I would say it's the same thing in Europe. And then here's the natural gas price for Europe. He was kind enough to send me this chart as well. It's a generic one. It's that the one that I spoke about before. So that one as well. We are like 6 times really where it used to be. Basically for the last 10 years. We could argue that it was trading around 20 for the last 10 years before the crisis last year. And now we're at 102, 5 times really, not 6. 6 times would be around 120, which are not very far from. So what else have we got? Geopolitical mayhem. What do I think about all this conflict? And I say that because I think it's all kabuki theater with Russia and China. Well, I don't think we're going to have war personally against Russia or China. I think what's going on is basically this is a cover, all this talk of Ukraine or Taiwan, and what's going on behind the scenes is our leaders are negotiating, leaders if you want to call them, what's going to come next, because things are unraveling very quickly. In China, we've got problems too with Evergrande. Everywhere we've got problems. I think the banking system is in trouble, especially with all the leverage and speculation. Yes, we could have a crack up boom. We could have a last move higher in the stock market, but I think it's a very dangerous place to be. I still think having assets outside this financial system is a good idea. Yes, monetary wise, gold and silver, I'm still for those. For those of you who don't have gold and silver and are looking to get gold and silver, I have a promo code with Gold Investments, Maneko64. I highly recommend them here in the UK. You should, though, check out, do your homework. You might want to deal with someone else, but I can say Gold Investments, they've been in business for 40 years, and I've known them, the family, for 20 years. They give you a small discount if you use that promo code. For those of you who are also more into technology, I've got a referral with Glint. Basically, they store your gold, so there's a third party involved. They keep it for you in a vault allocated in Switzerland, and they also give you a debit card to use. You can spend your gold, and there's also the Glint app, of course, that you have to set up. And the referral there is Mario Glint 79. Aside from surviving financially, I would say that being in a tight-knit community is really important as well. Having family and friends you can count on, that you can help each other, is very important. Yes, I have to say, I'm not trying to be, how can I say, dramatic, but I think it's happening. And I will refer again a couple of books. The first one is Fiat Money, Inflation in France by Andrew Dixon White. How it came, what it brought, and how it ended. And this book, I read this almost probably 20 years ago, maybe a little less, but this book has really given me the foresight into what was probably going to happen. And I have to say, we are in different times than back in revolutionary France when this happened. But all the symptoms are very similar. They happen differently. The draconian, authoritarian, you can even say, rules that we're getting now, 3-4 years ago, I couldn't see it. Because it was a big part of the symptoms in this, the reign of terror during the French Revolution. I couldn't see it, but we're seeing it now. You just have to look at Australia and Europe and here in the UK as well. It hasn't gotten as bad yet. So all those symptoms are coming home to roost. There, of course, the events are different, and it's really hard when you're in it to admit that that's what we're seeing, but I have to say I think that's what we're seeing. And the other one, of course, is When Money Dies, The Nightmare of Weimar Hyperinflation by Adam Ferguson. And this was post-World War I Germany and Central Europe. You had the collapse of the German Empire. You had the collapse of the Austro-Hungarian Empire. The Habsburg dynasty collapsed. And you had a political vacuum. You had political mayhem. And this is before that Austrian guy took over Germany, way before. But the seeds were being placed there for that to evolve. Am I saying that's what's going to happen in the West? I hope not. But there were all the symptoms. There was a lot of debt, just like we have now. Insurmountable debt in both cases. There was rising prices, which is the consequence of the inflation that they created. The inflation in this one was created throughout World War I and in the post-World War I period. And then it led into also societal breakdown, loss of confidence in political leaders. I have to say, I'm seeing this in the UK. I've never had confidence in political leaders, but I think even the normies, as Cliff High would call them, they're losing faith and confidence now, especially with Boris Johnson, I would say. And don't think that getting a new conservative leader, or maybe getting a general election called and getting a Labour government will change anything. This is irreversible in my opinion. So I'll try to get you guys some free PDFs, and I'll put them in the description. If not, you'll have to buy these. So now let's quickly look at where the markets are this morning. We are early today, Billy and I. We have some things to do today, so we had to get up early. It's 7:30 a.m. We got spot gold, 1786.30. It's up $3.50. Range has been 87 to 82, so quite a narrow, tight range. Silver is down 8 cents, 22.34. We've seen a high of 52 and a low of 28. Dow futures unchanged. NASDAQ is up a couple of points, and S&P is unchanged as well. I expect these to start moving probably in half an hour, but I'm sorry, I have to do this video early today. We got FTSE up 25, up 1/3%. The currencies, sterling is down slightly, 132.03. The euro is down 1/8%, or actually about 0.2 at 113.23. Dollars down 0.14% versus the yen, 113.51. The dollar is continuing to move lower versus the Chinese yuan. Yesterday I think we traded down to 633.25 or thereabouts. Right now we're at 634. Yes, the dollar might be strong against the European currencies, but I think the yuan is the strong currency now. It's not the dollar. So Aussie dollar, where's the Aussie dollar? It's unchanged, 71.76. And the dollar is unchanged versus the Canadian dollar at 126.55. Kiwi dollar is up 1/8% at 68.18. Quickly to the commodities. Crude oil, WTI, is up 1/3%, 72.70. High-grade copper is down 1/3 at 438. U.S. natural gas is up 1/4 at 381. The 10-year yield is at 150. It's unchanged overnight. So there you go. I'll talk to you later. Take care. Bye.